please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Well, the Asian markets, they're trading with a mild green tick, so the likes of Japanese index, they should come up for you. Wall Street last evening shrugged off the recent trade uncertainty. The Nikkei trading about 76 points higher. The dollar-yen, we're seeing a bit of a weakening there. In the previous week, we saw some levels of sub 111. Now we're seeing the levels around that 111.3. That means good news for Japanese exporters. Perhaps explains the uptick that we're seeing on that index. Also, after a mild downtick that we saw yesterday, which saw some recovery. The Korean index sitting with a gain of about 0.3%. Big gains coming in from the Straits index, which is up about 0.8%. The Taiwanese index down about 0.1%. However, the SGX Nifty, that one should come up for you. Very interesting, because yesterday at the open, we saw some outperformance come by from the SGX Nifty. And right now, there is a bit of an underperformance as compared to the other Asian peers, primarily the Korean as well as the Japanese market. So the SGX Nifty now indicates an uptick of about 8 points at the start. Let's see whether this flattish sort of opening is bought into or sold into, especially given the fact that we did hit a record high yesterday, though we also sold off from the top.
Okay, so the Asian markets starting on the front foot, but that is because the Wall Street also ended higher, with the Nasdaq rising for a fifth straight day. Technology and consumer discretionary stocks led this gain. However, trade-related worries did linger as the US continued to clash with its global counterparts over tariffs. Now, gains were led by Facebook shares that ended more than 4% higher. CNBC's Eric Shemi gets us a wrap of all the action on Wall Street.
U.S. markets higher today, with the Dow adding 39 points, the S&P up 10, and the Nasdaq gaining 47. Pepsi CEO Indra Nooyi is stepping down after 12 years of leading the food and beverage giant. The company's president is said to succeed her on October 3. Nooyi will remain as chairman until early 2019. Meanwhile, Facebook is considering a messenger feature that would incorporate a user's bank information. The feature, first reported on by the Wall Street Journal, applies only to Messenger and not the larger Facebook platform. Incorporating a user's financial info into Messenger would allow banks to offer customer service through the platform, as some credit card companies already do. And YouTube, Apple, and Facebook are following Spotify in removing content from the controversial host of InfoWars, Alex Jones. The companies say that Jones has repeatedly violated key policies against hate speech and harassment. Jones and InfoWars have millions of followers, and his content has been viewed billions of times. That's the action from the U.S. market. Back to you in Mumbai.
Okay, on that note, let's get in some market opinion as well on the road ahead for the U.S. market and the earnings trajectory going ahead.
The U.S. story, really not much has changed. Earnings are booming, but possibly peaking here at around 23%. We just wrapped up the second quarter earnings season. The Fed is on track to raise rates gradually. Whether it's 3 more times or 6 more times, nobody, including the Fed, probably really knows here. And we're still a ways away from a possible yield curve inversion, at least measured by the 3 months to 10 years. So we're still in this twilight zone between mid-cycle and late cycle. China needs to do more, and you're seeing it in the stock market there. Obviously, trade, a very big part of that story as well. So it's, emerging markets in general, but China in particular, I think are really the thing that's moving the needle here. The curve inversion historically, but you also have the Fed putting its policy rate well over what is, the so-called natural rate, R star as we call it, 200 to 300 basis points. And so if you think about the current cycle, the 3-month to 10-year curve is about 100 basis points, give or take 10 basis points. That would require 4 more hikes at least. So even a flat curve doesn't do anything. And also, if the Fed goes 4 more times, the curve flattens to 0. At that point, the policy rate will be maybe 50 to 100 basis points above our star. It's not enough, in my opinion. So my sense is that if and when the curve inverts, it will be at least a premature signal, let alone maybe a false positive.
If you look within the news flow, there is a disconnect between what some of the headlines might suggest and at the same time good earnings power and actually fairly good economic data continuing to support that good earnings story. And I think from that we can see markets continue to trundle a little bit higher from here. August tends to be a little bit bumpier along the way. There's a little less liquidity, a little less trading activity that will amplify some of that news we were talking about a moment ago. But we continue to think that markets move higher and can continue to grind.
All right, across the Atlantic in Europe, the markets ended mixed over lingering trade war concerns both between the US and China. The DAX was an outperformer, rather underperformer, losing around 18 points, but no big moves on either side coming in from any of those frontline indices. Even if you take a look at the peripheral index, not big in terms of moves. So the FTSE Italian index should come up for you. That one ended with a gain of just about 7 points, loss of 7 points. The only index that really moved higher as compared to the others was the Irish index, though not sure of the kind of volumes that took place out there. However, we saw some money being pulled out of the emerging market indices. The Brazilian index, remember, day before yesterday saw a gain upwards of 2%, some pullback seen there, as well as the Russian markets, which were underperforming any which way over the last couple of trading sessions, saw a cut of about 0.6% yesterday too. So some money being pulled out of the emerging market space.
Okay, so that was about equities, but a lot of action in the currency space as well, because the dollar rose against a basket of currencies, building on 2 weeks of consecutive gains as investors bet that trade war rhetoric and a strong economy would continue to drive the currency higher. Meanwhile, the pound remained weak after dropping to an 11-month low against the dollar on worries that a hard Brexit from the European Union is expected.
In the world of commodities, oil market prices have been cautious ahead of the introduction of US sanctions against major crude exporter Iran.
And from the precious metal space, gold prices edged slightly higher on back of a steady dollar. Expectations for further interest rate hikes in the United States supported the US currency and limited interest in the yellow metal.
Welcome back. You're watching Power Breakfast on CNBC TV18. Now, after the Economic Affairs Secretary told us that the government is confident of achieving its FY19 fiscal deficit target, Principal Economic Advisor Sanjeev Sanyal echoes the same sentiment. Sanyal said that the government has been very restrained on the fiscal side and cannot be accused of populism.
To the extent possible, we will try and absorb it. Without doing oil bonds and other things that were done in the past. If we have to do it, it's a different issue. But right now, I think we have refrained from anything. So as things stand, this is a problem. Oil prices have come off a little bit, but they're still at elevated levels. Obviously, the sanctions in Iran are a very important key factor in all of this, on which, as you may be aware, India and the US are having a discussion as we speak, and maybe we will manage to have some sort of an arrangement, but it is an issue that remains and will remain a concern as long as we are a major oil importer, and frankly, there is no short-term solution to this problem. Okay, then now, as far as trade wars is concerned, obviously the old sort of regime, the global trade regime, is undergoing some stress and is being unwound in multiple ways. I am quite certain that whatever the new set of rules that emerge out of this period, there will be big opportunities for us in it. And our job is to understand what those opportunities are quickly and respond. Our model of growth has to have in it an important element of export. Exporting to the rest of the world is an important part of the government's Make in India agenda. So while we cannot exactly tell where this is going, we will look after our interests.
Economists will worry about populist measures as we get into the last year of the government's present tenure. Is that something that, your thoughts on that subject? And again, to turn that around into opportunities, we started by talking about reforms. What else do you think can be achieved before we actually head into the general elections? The
government has hardly been populist at any point in time. We, in fact, created a monetary policy committee framework, which in fact ties down any such thing on the monetary side. So that is completely independent, as you know. In fact, they have just tightened, if anything. Similarly, on the fiscal side, we have been very, very restrained. And as you may see, as I said, there were some painful things we have done, hardly can be accused of populism. Similarly, on the oil side, to the extent possible, we have maintained it such that it passes through. At some point, maybe if it goes too far high, yeah, certain response may have to be there.
Is there a cutoff level? What's too far?
It's difficult to tell, and it's ultimately a political decision. It's not an economic one. but so far, very responsibly held it all together, at least at the national level. There is no attempt at any stage at populism. In fact, I would argue, if you look through the history of election cycles in India, never has there been a period where you have had a government being so restrained, whether with inflation targeting and or with this period of oil prices, this whole effort to clean up the banks and so on. At no stage has there been any hint of populism. In fact, if anything, we've been accused very often that we have perhaps been too conservative about everything.
All right, so interesting commentary coming in from there, Mr. Sanyal. But let's shift focus back home. On Dalal Street yesterday, the market ended the session with gains despite slipping from the high point of the day. The Sensex and the Nifty were higher by 0.3%. The Nifty less than 10 points away from yet another record closing. The banks, they outperformed in trade, with the Nifty Bank gaining over 200 points, most of them led by Axis Bank and ICICI Bank. The mid-caps too were higher by about 1%, 0.5% that is. Anisha now joins us to tell us all the market cues that we need to watch out for this morning.
Oh yes, Mangalam, as you told us that the market has been scaling new high of late. The Nifty conquered the 11,400 mark yesterday, and the Bank Nifty, as you mentioned, really outperformed. It was actually Axis Bank and ICICI Bank that actually contributed to most of the gains when it comes to Bank Nifty. In fact, in the last couple of sessions itself, Sensex has gained over 400 points, and the Nifty has also added around 150 points. Even the point that Nigel was making yesterday about the mid-caps, it's the 11th day on the trot that the advance decline ratio was positive, and analysts and experts tell me that this is the first time it has happened since 2014. So an important indicator to watch out for, and it has been a buy figure both from FIIs and DIIs yesterday. So a healthy buy number coming in from FII in the cash market of around 250 crores, and the DIIs, they also pumped in around 220 crores. As far as the global cues are concerned, they're more or less positive. Yes, there are concerns when it comes to the US markets and the impending sanctions on Iran that is expected to come by. And that's the reason that the crude is moving towards the $74 per barrel mark. But nonetheless, markets in the US and the investors are basically focused on earnings, because remember, out of the 80% of the S&P 500 earnings that have been reported, over 20% of them have been better than expectations. In fact, the expectations were already high with a growth of around 20%. But overall, if you see, the growth has come in over 24%. So that is something that the street is watching on. Yes, there are concerns when it comes to trade wars regarding China, with NAFTA, with EU, but the street is focused on individual stocks. Facebook, for example, was up around 4% yesterday. Disney was moving higher. PepsiCo, of course, was in focus because CEO Indra Nooyi is looking to step down. But other than that, Asia this morning is also positive. We were getting early cues that SGX Nifty is suggesting a positive start. Nikkei trading around 0.3% higher, as well as the early rate from Shanghai suggests an up move of around 0.25%. In terms of the local cues, of course, earnings remain important. A lot of earnings lined up today as well. M&M, Motherson Sumi, Punjab National Bank, TVS Motor, Adani Enterprises, to name a few, Mangalam, that we'll watch out for in terms of earnings that is expected to come today.
All right, Anisha, and the other stocks that you're watching out for would be what?
Well, a lot of earnings reaction that we'll be watching out for. So Adani Ports, yes, the reported numbers look a bit weak, but if you look at the internals, it remains to be strong, because if you exclude the SEZ income, the revenue is up around 16%, and the EBITDA margin is also strong, and the cargo volume of around 9% is healthy. Adani Port Power, yes, the losses continue, but it's not as bad as the street expected. The losses come at 825 crores versus an expectation of 1300 odd crores. So I don't know whether you can take heart from that matter or not, but nonetheless, it is in line. Max Financial, a mixed quarter, because the profit before tax is actually down 14%, but the protection business that continues to grow. Then Lakshmi Bank, the results are not that great because the GNPA ratio has gone up to 8.94%, and if you look at the net loss, that has widened now to 45 crores. G1, it is a weak start to FY19, as Abhishek calls it, because the customer growth is actually weakest that we have seen in 8 quarters, and there's a sharp decline in disbursements also if you look at sequentially. Syndicate Bank, bad set of numbers because the loan book is down about 7% sequentially. Dixon Tech, it's a mixed set of numbers because mobile segment continues to deteriorate, but other than that, the margins have expanded. Parag Milk, good set of numbers because the net profit jumped into 27 crores versus 9 crore last year, so tripling of profit there. Avanti Feed on the flip side was not as good because the profit is down 40% there. And in other news, Unichem Lab has the news that US FDA inspected one of the facilities, that is a Roha facility, and have issued 4 observations. The management says that there is no impact on the working and they will reply in 15 days. Other than that, Sun Pharma and Cipla have launched a couple of the products, so that will be in focus. There is an exit at AkzoNobel with the MD planning to leave, so that will be in focus. M&M, the production numbers came out and they didn't look very strong because the production is just up around 3% in the month of July. Quality, well, the quality of the management commentary remains very important because there has been a delay in QY FY19 earnings. Let's see what happens to that. And lastly, important ASM list, because there have been additions in terms of Adani Green, VIP, Morpin and Gujarat Alkali, so they will be in focus. And two companies that have been removed from the ASM list are Prakash Industries and Lloyd Steel. So reaction on that will be very important, Mangalam, as well.
All right, fair point made there on quality, but we'll slip into a short break, come back. We'll get you an exclusive conversation that we had with Mr. Kaushik Basu, the former Chief Economic Advisor.